Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of DraftKings, ticker symbol DKNG. And so here I wanted to do a follow-up on last week's rough cut requests, which included DraftKings prior to their earnings release. And yeah, so I just wanted to go over the levels that I went over in that, as well as add on a few others. And so basically what we saw was that following earnings, it does look like we saw this topping signal. I did go over the line at $44.79, marked by this yellow line. And that did act as resistance. As you can see on the 15th, we did get a wick up to that level. And then we actually got a wick up even higher on the 16th, hitting a price of $45.62, but not being able to get a close above that prior wick up, that prior high, at a price of $44.95. And so that did suggest that we could not be getting more buyers to step in at new highs, and the price did pull back. However, on the 16th, we did see, let's see, a green day, actually more or less being flat relative to that prior day, just being up 0.25%. And then the following day, we saw a pullback of more than 7%. And we are now trading, as I record this during market hours, on Thursday, February 22nd, at a price of $40 and right around 25 cents. We are red on the day. It looks like down just over 1% relative to the previous day's close, but we did actually open higher, getting a pretty big pullback on the day. And so I do just want to go over the levels that I've marked here, as well as go over a couple Fibonacci retracements that should offer some guidance. And so here, taking a step back, we can see this yellow line that I did go over in last week's video, based on the high here, going back to June 2020, that acting as support throughout this time frame. And then I also do have this purple line drawn here at $47.54. That being a little bit of support here during this consolidation. Actually looks like a bear flag, with this coming down to that level, consolidating before breaking lower. So I do think that is good to note, this bearish consolidation there that did break down. But now with the price being below that level, that may act as resistance because there's all that consolidation above it. I will go over that in a second, but I do first want to go over some downside potential levels. And so with that being said, the levels that stand out to me, one being this orange line at a price of $39, really just corresponding to the consolidation that we saw over here, a number of wicks testing that level, with that being resistance before. All of that consolidation will be acting as support if we do come down to that level. And we can probably see that reflected in the volume profile. We can see this little volume shelf here that really starts to stick out around $38.62, but really just, round number at $39. I do think we could find some support there if we do come down that low. Then also we do have this gap to the downside at $35.53. That also corresponding with this volume shelf here, having had some consolidation below that level. If we do dip below $39, we could head down to $35.50, filling this gap. And then I do think we would consolidate there, or at least I hope that we would consolidate there, because below that we don't have too much price action before getting to this other gap down right around $29 here, marked by the high on November 2nd of $29.03. So those are some potential levels to the downside that do stand out to me. I am also going to go over this Fibonacci retracement that I've grayed out here, just bringing it back into picture. Some of the levels from that do stand out. The 50% retracement at $38.80 does correspond nicely with this orange level that I have. So I do think price could be returning to that level. And then also, the low of this retracement that I did is at right around $32. The low being $31.98, which was the low on January 4th. So that is another level to consider. The 786 does seem to correspond with this gap fill, and that is at a price of $34.90, so just below that gap level. So I do think price could also be returning to there. The 618 doesn't really seem to correspond to a level that would act as support, as we do see this gap in the volume profile. But now, if I do remove that volume profile, we can zoom in on the price action. It does look like the 382 at $40.41 has acted as support. However, we are currently trading below it. It will be interesting to see what the closing price is for the day. Hopefully it is above that level and it does hold as support. It does look like it held as support yesterday. On February 21st, we did hit a low of $40.42, so just 1 penny above that level. So hopefully, if we do see a close below that level today, that does act as a fake out. We do want to see 2 closes to show us that we are confirming a breakdown below that. And if we do see a second close with the closing price below today's low, whatever that ends up being, currently being at a price of $40.22, if tomorrow's close is below today's low, that could suggest continuation downside, like to test $39 or $35.50. So something to keep in mind. Also, it is interesting that the 236 does appear to have acted as resistance today, that being at a price of $42.40. The high today so far being $42.35, so just below that level. And then also levels to the upside. You might notice that I do have this diagonal line here that is for another Fibonacci retracement, and that is going to the upside, just an extension from there. The 1618 is at a price of $48.83. So if we are able to find support over the next week at this 382, right around $40.50, if we're able to hold that and break back above the 236 here and get multiple closes above the high of $45.62, then I think we could start to consider a continuation to the upside. And one target I could see being $48.83, or right around $49. But of course, we do have to break above this level, $47.54, which I had gone over as being potential resistance. So I do think that is going to be a key level, but I do think it is good that this extension that we see here from that retracement could suggest price going to around $48, $49. So something to keep in mind if we do find support around where we're at and start to break above these levels to the upside. But those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments below, and subscribe to the channel for more videos like this. Thanks a lot for watching.